Hello and welcome to another update video about HBAR. So HBAR has basically moved perfectly over the last few weeks. We had a trend reversal area here that was well communicated and everybody knew about it. And since the price left this box to the upside, I mean, we had small support areas down here. So assuming someone scaled in here somewhere in the middle, the price has moved 35%. That is quite a bit. Not necessarily massive in crypto, not, especially considering the type of market we're in now. There are other coins that doubled, tripled, quadrupled, whatever. But it's okay, it's okay. We're happy with all profits or, anything that really moves into the expected direction. It also not only moved into the expected direction, no, HBAR actually reached our target range between basically 5.8 cents and 6.7 cents. There wasn't much to update over the recent days and weeks, especially as we kept our focus on more interesting charts. But now that the target has been reached, it's going to be very interesting. I mean, this is still an Elliott Wave triangle that could easily break to the downside, generate a new bear market low. That risk is there. On the other hand, we have several coins at the moment that move in similar ways, which could have started some kind of a diagonal pattern, okay? So I'm not automatically saying, okay, this is where we definitely will get rejected. Maybe a few months ago, with such a similar pattern, I would have said, yeah, pretty sure, we're gonna get a rejection here and break down to new lows because the market overall was still bearish. Now, this can still happen here. Bitcoin, remember, Bitcoin is due a pullback. So if Bitcoin does a deep pullback, maybe to 30K, 28K, whatever, we've talked about that in the Bitcoin video, then HBAR, I think, obviously there are correlations. Yes, we take every chart on its own, but if you look at this chart, there is a potential for another bear market low. And if Bitcoin drops down 20%, I mean, what is HBAR going to do? Okay, so easily could do 40%, 50%. I mean, just highlighting the risk here, okay? This is a pretty complete Elliott Wave triangle, which might have started in December. And we have a wave A, which topped in February. We have a wave B, which bottomed in June. We have a wave C that topped in August. And then the D and this E wave is in 3 waves. And if we see a rejection here and we see an impulse to the downside, that's really what we want to see. Well, see, then we have a good case to make for, this is sort of the last wave down here. I actually haven't labeled this completely, but this here would be a wave 4 with a wave 5 to the downside, which could complete then this overall wave 2 of the basically the bear market wave 2 correction. Yeah. So all I'm highlighting here, this is resistance. 5.8 cents to 6.7 is key resistance. We also have a trend line going through here. Technically, though, it could still stretch even higher than that without invalidating this triangle. I mean, more upside and a direct continuation to the upside in this third wave, which might take us to, well, certainly 10 cents plus. That will only get more likely if we get a break above the so-called C wave high of the triangle. There would be a break above the 7.5 cent level. If we see a sustained break above that level, it would emphasize the idea that we're moving up in a third wave, because that would cause a recount in the triangle and then will also automatically make the overall triangle wave count less likely. Looking at the microstructure, if we talk about this, then this is the E wave of the triangle. The E wave consists likely of an ABC structure, and it looks to me as if this C wave is a diagonal pattern. Okay, so it is just too choppy for an impulse. And also the first rally down here seems to have been a 3-wave move. So it's hard to say how exactly the count is playing out in the microstructure, because we just have to be careful with all these choppy diagonals. But this would be my take on it. Let me highlight. So we always have to be mindful that these diagonals, they can easily shift their projections and counts on the micro level, because see, that's just what they do. They just consist of corrective structures. So that's what sort of my take on it. A, B, C in wave 1. Wave 2 is anyway a correction. Then A, B, C in wave 3, 4, and maybe now in wave 5. So let's see. We have definitely a few levels to watch. 6.7 cents is the next one. I mean, we haven't even broken above the golden ratio, which is here at 6.2 cents. And yeah, as I said, if we break above 6.7, the next target would be at around 7.5, 7.6 cents. That's my update about HBAR. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.